Hello traders, the title of the video is Practical Elliott Wave Trader Goes One Step Further. Alright, so how do you go one step further as a practical Elliott Wave trader? That is the question that we're going to answer in this tutorial. So many Elliott Wave traders understand the Elliott Wave theory. They have been using the Elliott Wave theory for years, but some of those traders, did not go one step further. How do you go one step further using the Elliott Wave principle in a practical fashion? Right? In order to go one step further as a practical Elliott Wave trader, one must ask questions, essential questions, and get the correct answers to those essential questions. I'll give you one example now. According to the Elliott Wave theory, the normal or the regular third Elliott wave very often will stop at 161.8% Fibonacci extension level of the first wave. So when we say first wave, second wave, and the third wave, and then the fourth wave, if the third wave stops or could not go above the 161.8% Fibonacci extension level of the first wave, we usually say that this is a normal third wave. This is not an extended third wave, theoretically speaking. It's a regular third wave. So I learned that as an Elliott Wave trader. But then when I start trading, going to the practical bit, I start asking questions, relevant, essential questions. Those questions allow me to go one step further. All right, so asking relevant, essential question, we allow an Elliott Wave trader, to go, one step further. Just want to write something here for myself. That's the first step. The second step is to use what we call deduction. All right, deductions. So to say 1 plus 1 equal 2, we can deduct that. We can divide 2 into 2, all right? Is that a good deduction? All right? 1 plus 1 equal 2. When we split 2 into 2, we'll get 1. That will be a deduction. So there are Elliott Wave rules. We can go one step further, try to make a deduction from that. So I've done those kind of exercise recently when we were talking about the rotation of market pattern. 1, 2, 3, 4, 5. We can deduct that there may be a rotation of the market pattern. So talking about rising channel, turning to become a declining channel, or horizontal channel, A, B, C, D, E, 1, 2, 3, 4, 5, horizontal, and then rotation of that horizontal channel becoming a rising channel. 1, 2, 3, 4, 5 in an uptrend, and then rotation again, that rising channel becoming a declining channel or horizontal channel. So 1, 2, 3, 4, 5 up, and then horizontal channel 1, 2, 3, 4, 5 during the fourth wave forming A, B, C, D, E. So you have the third wave 1, 2, 3, 4, 5 in a rising channel, rotation of Elliott wave. Pattern, market pattern becoming 1, 2, 3, 4, 5, A, B, C, D, E in the fourth wave, horizontal, and then again 1, 2, 3, 4, 5 in the fifth wave, and then again rotation of the market pattern. So it's a deduction. So asking first relevant question about everything else that you know, and making deduction, logical deduction. Now, sometimes because we don't want to make it like a science, all right? So some deduction may be logical, but practically speaking, you want to know whether it's useful. So the word that I'm using, practical, it means that it's practical and also useful for trading purposes. All right? So the same thing we did before when we were talking about the minimum price move is free. Yes or no? All right? So price going down, we do 1, 2, 3. If you fail to go above that third move, there's a high chance there will be a bit of correction, pullback, isn't it? It's part of it, because usually when we are talking about corrective wave, it's represented by 3. The impulse wave are represented by 5. 1, 2, 3, 4, 5, isn't it? So with those deduction and asking question allow us, okay, to go one step further. So you may say, Joe, you are looking at affiliated managers group stock belonging to the financial services sector, asset management. The APIC is AMG, Alpha Mike Golf. So what are we got to do? What can we learn from this chart? You see now? So one step further. So you see this chart now. If I ask the chart what the price did so far, this, okay, and it chart will tell you it went up from here to here, then pulled back to here, and then went up again. So this is the first move. We can say that the chart will say this is the first move up, daddy or mommy. Okay. The second move down is the third move up. This chart does not know anything about area wave, but I can tell you that. Okay. Or if you apply Fibonacci extension to the first wave, as we said before, or to any first move on any chart. So this is about deduction and asking question. So we can deduct that because they told us that regular, which means if we are talking about regular, we are talking about in normal condition. In normal condition, if a financial instrument goes out from A to B, and then pull back, all right? And start going up, okay? If it breaks above this high, the target that people are watching is what? 161.8. That's the deduction from this thing about the third wave. So anytime we see a first move and then a pullback, going one step further, as an area trader, we can deduct. It doesn't mean that logically, that's what they probably definitely do, is that it's possible that it can happen. You see the retracement here? It's not 38.2%, it's 78.6% level. You may say, Joe, normally if it's 38.2% retracement, that's when you have 161.8. But look again, look, the price went up here, pulled back all the way down to almost 78.6% level. Talking about one step further, if you are here, you call this one first wave, and you call this one second wave. As an area with practical area with trader, like I said to you, one step further, as you start going up, regular normal condition, your target doesn't mean that the price definitely go there. Your target will be here. Look what's the price. Did people take profit there? 161.8 of the first move. Whether it's a first wave, whether it's something else, the first move. One step further. So it's not only about area wave, it's about the stock chart, the price action in general, finding something that we can work with and using it in a practical fashion that is useful for us to make excellent decisions. Will you agree that what I've said so far makes sense here? So people in the financial market are paying attention to that. Apart from the 138.2% level, I don't want to mention here, but here it is. The target is there. Doesn't matter how the deep retracement is from the area where who wants to. So now this is what we will call, and this is my preliminary welcome for this. This is right. It goes above the 138.2% Fibonacci extension level of the first wave. If it didn't go above the 138.2% level, we will not call this an impulse wave. We know that. I talk about it 100 times. Everybody knows it now. It goes above it. So what is happening here? You agree with my wave count? That supposed to be the third wave of a higher degree is subdivided into, all right? Am I correct? Yes. Let's see. 5 manual wave. Feel free to disagree with my wave count, and I will say to you This is my wave count. So 1, 2, 3. Where are we now? And third. Oops. All right. Is it making sense? Manual waves of the third wave and the fifth manual wave of the third wave somewhere there. Is it making sense? Any area wave violation? So the first manual wave or the first wave in fact is subdivided into 5. 1, 2, 3, 4, 5. Good. Yes? That's the first wave itself, first manual wave of the third wave, subdivided into 5 manual wave. Second wave, do you agree? Or is it all the second wave? So another person may say, is all this the second wave? Another person, second manual wave, say here, George. Maybe. No big difference. I'll put mine here. So that person who said that that second manual wave is here, they say, all right, here, 1, 2, 3, 4, 5. That's what the fifth, that's the third manual wave, so divided into 5 manual wave. 1, 2, 3, 4, 5. I'll leave mine here. All right, no big difference. So I'll say first manual wave, all right, or that third manual wave itself, second manual wave, or that third manual wave itself. All right, and then okay, 1, 2, so 3, 4, 5. So third manual wave, fourth manual wave of the third manual wave itself, the fifth manual wave. Okay, so by the point I'm making, going one step further, so you say call this first, second, third, you'll be saying now that we are now in the fourth wave, which is a corrective phase of this impulse wave forming the third wave, right? Or this impulse wave. So there is a corrective phase of this training phase, probably forming. So now you see what we are saying? Going one step further, what can we deduct? Asking essential, relevant question. So if this wave count is correct or should stand the heat of the pressure, this talk, by the way, looks like a text that's talk. Do you remember? AMG looks like a text that's talk right now. Okay. For this wave count that I'm calling today to be valid, the price here, it comes a little bit into the range of the first wave. With the tail, we put a question mark on it now. Okay? So if for this wave count, which is one step at a time, practical area wave count to stand, the price should not come below the level of $132. All right. That's why some traders that are practical area wave traders are buying at that level. Though we have a bit of tail, they push it back down. But you have to understand what is happening here. For us not to have an area wave violation, meaning that the price going back below, in the range of what we are calling here the first wave, shouldn't go below that level. Some traders may say, Joe, thank you very much, I'll go and buy this stock now, it's not going to go below. No, it can go below it and come back all the way here, which will constitute a violation for this wave count, or which means our wave count is not correct. So we go back again, take into consideration what the price has now given us, and then try to make sense of it using the area wave principle. If it goes below it, what has happened? What has changed? The new data has come, something has changed, we go back again. Or sometimes you see like this, okay, you see what I'm calling the first wave. If, for instance, all right, I do not have enough data. Suppose I do not have enough data, and there was one more here before that I don't have on my chart. So I'm working with, in that case, I will be working with a limited data. So if there was a first wave before, and then there was a second wave which I cannot see on my chart, and then this is the third wave, and this is the fourth wave, almost coming to the range of the first wave, then this will be what we'll be calling All right. The fifth way, yes or no? This will be what we'll be calling the fifth way instead of the third way. In that case, well, I can't blame myself because I don't have enough data. But here we are. So those are the reasons why we ask essential question. Do I have enough data? All right. With the information that I have, that's what I can do. All right. If this is truly the first move, we have a pullback. The third move usually will stop in normal condition, will stop at 161.8. Sometimes it will do exactly that, sometimes it may not. In this case, it did it. Stop at 161.8. It's coming down. For those of you who are trading this stock after the area weight discussion, that's what we say. Go to practical stock chart analysis. Determine the possible path that the path will take. You see, and trade on the edge. Draw your channel. Use market geometry. Measure the width of this channel. Project it up, project it down. And trade around key levels. That's it. You are looking for trading opportunity around key level. So you see one at a key level, you use a different time frame trading method to trade it. So when you see the trading setup, now you ask yourself, where are we now? This is about applying the Elliott wave. So the wave count allow us to know where we are. So we say, first wave, so we say, we are here. Second wave, we are here. Third wave, we are here. Now, if you want to know, where are we going? We are talking about Elliott wave forecast and price target. But there is another question that I mentioned before, essential question. It's allow you to go one step further. Making deduction will allow you to go one step further as a practical Elliott wave trader, getting the correct answer to those essential questions or making the correct useful deduction, not only logical deduction, but useful deductions. So now another question that I'm talking about is what is happening now? This is about fundamental analysis, Google acid test, the S&P 500 that represents the market itself. One cannot trade any stock on its own. One must always check the S&P 500, the market environment, and so on and so on. So this is about practical Elliott wave trader goes one step further. If this video has been truly useful to you, okay, please let us know by giving us your thumbs up. If you say that, George, I'm not impressed, okay, mark it down. I do pay attention to those negative ratings. They allow me to work harder for you, okay, the next time. However, if you think this is an essential tutorial that can help other Elliott wave traders, feel free to share it on Tumblr, Google+, Twitter, and also on Facebook. If you have not yet subscribed to our channel, please subscribe to our channel today. It is free. Make sure you click on the notification bell, ring the bell, okay? So anytime we record a new video, you will be the first person to be notified. If you have any question or suggestion, please put in the comment section. And in due course, I will be recording another video to answer your specific question. To summarize this video, for a practical Elliott wave trader to go one step further, he or she will start asking relevant essential questions and get correct answers to those relevant essential questions. The next thing that one should do is to make useful logical deduction. With that, one will start going one step further, becoming a better Elliott wave analyst. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about practical Elliott wave trader goes one step further. Financial instrument that we are analyzing today is Affiliated Managers Group, Epic Alpha Mike Gold. Happy trading to you all, and I will speak to you soon. Thank you for watching.